Greetings and salutations to all my brothers and sisters out there. Hopefully you survived the week. It wasn't a very pretty one. But then again, we haven't had a very pretty year in my opinion. But if you're a short seller or had a little bit of a short delta on, you may have been able to clean up a little bit. Oh, what a week. I'm glad it's over. But it is over, and when it's over, it's over. You just have to look and go and move on because that's just the way the market is. You just have to play the hand you get dealt. And the dealt hand was one that I wish I could have folded last week. Terrible. Terrible. I was long a lot of deltas, but that's okay. It all works out in the end. If you're not too close dated, you can watch these things come and go. If you got a long date on, if you've got a 45, 30 day till expiration kind of mindset going on, hey, you can just kick back and watch a disaster happen and still got to hope it comes back up. So on these cases, whenever it goes down like that, and you have these big red days in the market and you see all this treachery afoot and all this trouble going around, it can be a little bit tough. It can be tough watching your portfolio just hemorrhage money. Even though it's a theoretical loss, they're going to view it as a total loss. So on these days, it's very important to mind your emotions and your isolation. You know, just the mere truth of the fact of being retired or being a trader, both those kind of go hand in hand. You get a lot of time alone and there's nobody around to run it by. There's no meeting you can call. There's no team of think tank people that you can put together. It's just you against the market. And really that works for some people fantastic, and for others it doesn't. And for that you have to kind of ask yourself what kind of person you really are. Are you a person that needs a lot of high praise, high maintenance? Are you a person that needs a pat on the back every now and then? Are you a person that really doesn't need either one ever? So, you know, and being honest about that can save you a lot of heartache and sort of isolating feelings. Because whenever, you know, you're in the thick of it or you're in the weeds, it's probably just going to be you. You may have other traders, but they're probably not sitting over your shoulder while you're trading. You may have friends that know something about the market or even the company that you're trading. But the truth is, really, it's going to be you and your money. And at the end of the day, they're not going to help you. They're not going to be there to help the cause. So this can really trigger if you go day after day after day of losing money and watching thousands of dollars go out of your portfolio, especially if you have a small portfolio. It's going to hurt it. And it's going to hurt you, and you're going to wonder about this. And sometimes you make bad decisions whenever those kind of emotions take over. So you really have to get those in check. You really have to, I mean, they say, you know, just forget about it. Well, nobody's going to forget about it. If you lose a bunch of money, you're going to lose a bunch of money. Nobody's just going to slough that off. But the real truth of the matter, remembering it actually, in my opinion, gives you some of the best lessons that you're going to find in the market. Now, we'd rather not make those lessons and learn them ahead of time, and that's kind of what we hope to do here, is help you out so that you don't make the same mistakes. Well, a lot of times I did. And one of them is getting too emotional. And it doesn't matter. It can go the other direction as well. Let's say that market's up and you're just, every trade you make makes you look like a genius out there, and you're just slinging it thinking this is absolutely the easiest thing I've ever done. Why doesn't everybody do this? And when that happens, you start getting this euphoric kind of high. You get that adrenaline rush. You get that victory rush. I mean, same as anybody with a scratch-off ticket or a winning touchdown. The thrill of winning is a very real thing. And it releases an excitement into your life. And justifiably so. It's fantastic to win, right? And it's fantastic to win money. And you're fantastic to be right. And you won money and everything's going good. But that also can make you overtrade and make trades that look good, and maybe you're a B plus setup, but it really is actually a C minus trade. You have to control your emotions heavily. You hear that a lot in the trading community, but I don't think you really understand it fully until you are just by yourself trading, until it's just you doing you versus the market. And I tell you, the market comes out on top a lot, and you need to be ready for what happens. But hey, we just let it go, like water off a duck's back, right? We just let that go, and you know, it is what it is. But the one thing we want to make sure and do whenever we're doing is not get caught up in the moment. You know, are we getting married to a trade? Just because we really like this trade then and we put it on and now it's underwater and it doesn't look that promising, do we still love it? Are we still, in love with this trade that we put on forever ago? And now, maybe the tables have turned. Maybe you've learned some new things about the trade that aren't that attractive anymore. Maybe you learned a little bit of the history of the trade and you're like, I don't know if this trade's for me. Well, cut your losses and move on. While you're trying to fight back to get $200 or $300, you may be losing way more than that on another trade that you could be making. Let's think about, you go $300 down on a put that you have, a naked put. Well, that $300 you could be turning around, putting on a strangle somewhere else, and easily just make that loss right back up. So don't get married to a trade, and also don't fall in love with the trade. And don't fall in love with bad trades especially. If they're good trades, you can act like you're in love for a while, but as soon as that trade starts going wrong, you need to divorce that trade and get out of it. And that's why the buy and hold theory is such a shaky theory, and we're going to do a video on that coming at you soon. But, for the market this past week, it was red. The heat map is red. You understand why they call it heat map? Because it's all red. Everybody's red. It's okay. Everybody's down. But when you see everybody down, it just tells you that it's a bunch of market people being neurotic. The same stocks, all the same stocks can't go down. I mean, they can, but it doesn't make any sense for Abercrombie and Fitch to go down with ExxonMobil. They don't move in, congruent with each other all the time. So let's just think about it for a moment. If the whole stock market goes down in the same pattern, in the same way, on the same day, that can't be a thing that's going on fundamentally in the companies. It's just impossible. It's just not going to work like that. Now, if you see an entire sector going down, or if you see something of that nature, that's a little bit different. But when stocks don't have an ounce to do with each other, just because they're both stocks, that can't be the way it's working. So it has to be some kind of market sentiment. It has to be some kind of fear that's induced. And the news loves to induce fear on you, and any chance they can get to strike up a headline that absolutely gets you going off your mark, or they'll have 10, 12, 14 headlines to select from, and they want the most fearful, the one that's going to induce the most panic into you. They think that's the one that gets the most results, and unfortunately it does get results. So you should panic no more about this oil prices and the price of precious metals or anything else that's going on right now any more than any other time in the world. That's been going on for years. The stock market's been around for a long time. Oil's been around for a long time. They've been fighting over in the Middle East for a long time. So let's just be honest. It's just a wave that you just need to ride through, and hopefully this wave is just about finished. So you can get in there and you can make the most out of these waves. You can ride them in and short scalp these things, or whatever the case, you may short trade them. You may be into USO, or you may be into the big dog oil futures. Who knows? But whatever you're doing, if it's working just fine, but be aware that you need to understand that these markets can turn on a dime, and it's usually negative. They can turn negative on a dime with no rationale, no reasoning, no rhyme behind it. And that's just the market for you. I find that the market has very little rationale or reasoning. When you see stocks that produce fantastic earnings and everything else, and all is right with the world with them, and the stock drops, and the absolute reverse is true as well. You can see stocks that have not so great earnings turn around and the stock goes up. No reason, no rhyme. So you can't ever front run the market. You can't listen to people who tell you, I know what the market's going to do. You're lying. You don't know what the market's going to do. Nobody knows what the market's going to do. The market doesn't even know what it's going to do. So any time you're hearing people say, well, I know what the market's going to do, or we're heading in this direction, you can take it with a grain of salt. They probably don't know anything more than you know. I mean, let me give you a bold prediction. The market's going to go up. Over time, the market's going to go up. You heard it here first, folks. The market always goes up. If it goes down, it'll go down for a while, and the market then goes up. That's just the way it is. That's just life in the fast lane. And you just have to be able to play both sides of the market, or play long enough term to ride out the curve. But, at the end of the day, if you trade often enough and you trade smart enough with the right mechanics, it's all going to balance out. You're going to get there. You're going to get to where you need to be. But, sometimes you just have to endure weeks like this. And the thing we say, make sure that you're protecting that capital. Don't let that buying power dip too low, because you have $1,000 dip on your small account. Can you handle that? Can you handle it 2 or 3 times? So just make sure you're not getting in too deep and you're not getting in too heavy. And if you are getting in too heavy or you're already there, just make sure you have some kind of plan. Hey, if this market opens up tomorrow and I'm down $500 in the negative in my buying power, what am I going to do? What's my plan of attack? What's my action here? Because you're going to need one, because they're coming for you if not. Risk will balance that out. So you know what? Yeah, the market wasn't that great, and even some of our darlings that we were playing in and out of, like SoFi and Lyft and these types of $20, $30 range stocks, they're just getting tore up for absolutely no reason. I mean, they keep making such good headway, and everybody loved SoFi 6 months ago. Now all of a sudden they're wondering if they're a fraud or a scam. A scam. I mean, SoFi, a scam. Yeah, I mean, come on. But you know what? That's just a neurotic market. So now you got to play it to the other side. You got to play neurotic people. Don't ever front run the market. It's like they say with medicine. If you have a reaction to medicine, that's not a good thing. That's not a good thing. And you don't want to react to the market. You don't want to just be like, oh my God, something's going on. I need to sell all my stock, or I need to buy over here because I've got FOMO. Forget all about it. Just settle down and play the mechanics. Do what you know is right. And it's just the other way. Hey, they're responding to the medication. Responding to the medication is very good, and that's what you need to do. Just respond to the market and the moves the market gives you. You know what? If the market is just a terrible market and your response to it is, this sucks, and you need to set it out a day, that's fine. You need to set it out a week and just make defensive strategies all week, well, that's fine too. I don't even know how many. I probably made 20 different defensive strategy moves this week on the stocks. It could have been a roll to a stock, or just closing out a position that was just under one. I mean, sometimes you just got to be honest with yourself. Hey, this credit spread's not coming back. It's not even a lottery ticket at this point. Let's just get it out of here before it eats up more of my delta and just screws things up. So that's just life, and some things you got to do. So I say to all you, my friends, brothers and sisters out there, don't worry about the week that's passed. Learn from it. I hope you have a better week. I hope this week finds you very well. Tune in with us next Friday when we'll talk about Friday after the bell and the week that was, whether it was good, whether we can laugh or cry together. It matters not. Just stay in the market, stay in the game, and you'll find that you'll become prosperous at it, and you'll have a lot of fun with it.